Top of the morning, back at it again with another one. And today, we're looking at the Nasdaq. If you don't know now, you know. Be sure to give us a follow on Twitter. The handle is SCHMDII, SCHMDII. And we'll be posting all things charts and everything beyond the charts from there. Now, today's Tuesday, good price action. Very nice sells that we got. I'm gonna talk about it. Just looking at the calendar, we had Fed Chair Powell testifying at around 10 a.m. Eastern Standard Time. It's only started seeing some volatility in the market. It's been very fruitful, very fruitful to use the economic calendar as a roadmap as to when to sit at the charts and to expect volatility. Gone are those days where I'd sit on the charts the whole day looking for something, only to burn through my mental capital and not be sharp in between the ears when it's time to execute and take trades. I can't speak for everybody, but of course for me personally, planning my trades around the economic calendar, so looking to enter or to sit at my charts when news drivers release has been pretty fruitful for me. And if it could help anyone else, give it a shot. Today I knew like that Fed Powell chair is testifying at around 10 a.m. Eastern Standard Time. That just so coincides with the times that I trade. I look to take my entries between 10 a.m. and 11 a.m. Eastern Standard Time. That's it. I might watch the market open, but I found that in some instances something will pop up off of the chart and then I'll be tempted to enter and participate. Whereas if I just take a glance, like I take screenshots prior to 8:30, prior to when news drivers drop, just so that I have the record for me personally, but I'm not actively on the chart. I look to sit at the chart from say 9:45ish or so. And yeah, just to see how price is moving and then look to take advantage. That's precisely what we did today. Going into today's price action, if you recall yesterday's video, as price was expanding up, we opened up this fair value gap over there. So that was the target that I was looking at, giving me my bias, which was bearish. This was also further informed by the fact that we opened near yesterday's high of day. We just consolidated under yesterday's high of day. You can see from Asia all the way into New York session, we just consolidated, building up orders on the top side and the bottom side. If I just throw on this sessions indicator quickly, you'll also notice that the purple is for Asia, the pink is for London, and then green is New York. You'll see in London, we didn't pierce above the highs that were formed in Asian session. Did not pierce those highs formed in Asian session. So this further gave me confidence. At the time, it was like low-key a double top. You can see that high, relative equal highs. It gave me the idea that, okay, cool, retail will see that as a double top. They'll be selling. Smart money will run their stops first, tap in breakout traders who had breakout orders or buy stops. Here, they had their stops loss orders probably down there for the breakout guys. Tap in the breakout guys, take their stops, and then continue to the downside. Or in the opposite direction, the people who sold will have their stop losses above there. Tap in their stop losses, continue down to the downside. It's a vicious cycle, but like, you get the idea if you've been watching the videos. If not, be sure to check out the other ones and you'll see that this premise of liquidity is something that's been serving us very well. But we had our bias, which was bearish. Come 8:30, you can see we performed that short-term low 8:30. Come midnight, we pushed up. So when price pushed up and I saw that we were above that 8:30 open and the midnight open, alarm bell started ringing, telling me that, oh, okay, the price is probably going to be bearish. And that is what we got. We swept the relative equal highs, that double top. This is also yesterday's high of day. Strong bearish movement. We took out that short-term low and we opened up a fair value gap on the 5-minute time frame, which is what I'm gonna switch over to now. You'll see, you can see where our target is, right? We also have a target. I'm not gonna show you the daily. You should have seen it in yesterday's video. If you didn't see yesterday's video, be sure to check it out. So we still had that daily fair value gap that we spoke on from yesterday. That was still our draw, and that's still a target that I'm looking at price to hit this week. We might have formed the high of the week now on Tuesday, giving us like that classic sell template for the week, that weekly profile. We'll see if it plays out. So 15-minute high of day, previous high of day got swept, price took down a short-term low, closed below the short-term low, retraced back up, and then we proceeded to sell to the downside. I'm just gonna put down this fib here using the candle bodies so we can take a look and further on see if we were in OTE or what. And would you look at that? Notice how price traded back up and we hit that OTE zone. This was above the daily open and above the 8:30 open. Pay attention to that. And then we proceeded to sell off to the downside. Let's just look to the 5-minute to see how much more that lines up to what we have marked out on the 15-minute. Now you'll see here previous high of day. This was on Monday. We opened, consolidated just under that high, and then from 8:30 when price opened, we shot up. Then we got to 10 a.m. You can see that 10 a.m. 10 a.m. came. We have made another purge of liquidity at after 10. So a mistake that I used to make was that I would get involved in PD arrays that would form outside of the 10 a.m. window. Whereas after backtesting, I found that if I pay attention to liquidity sweeps and as well as PD arrays that form after 10 or between the 10 a.m. and 11 a.m. window, though, and if those are in line with higher time frame order flow, those oftentimes gave me the trades that yielded the best results for me personally. So obviously I can't tell you what to do. I can just speak on what works for me. That's what happened. And as you can see here, at 10 we had that purge of liquidity above here. With this, we broke down and opened that fair value gap. This was the 10.20. So at 10.25, that's when we formed that fair value gap over there. Chart's gonna be a bit messy. My apologies. I'm just gonna mark this out just so that everyone can see. So cool. We had that fair value gap over there. Let me make it red so that we can see. Okay. We have this 5-minute fair value gap that also lines up with the OTE. Remember from the M15, the 0.62 and the 0.79, this area here, we tapped into that and began to sell off beautifully. I'm just going to remove that to make the chart a bit cleaner. You can see we have that breaker over there, low, lower high. I mean, high, lower, low. Yes, lower high, higher high, down, came back. So that breaker block over there lined up with the bearish fair value gap. You can see how long, how much volume these candles are. That displacement, it just goes to show that we're about to sell off, especially when it comes after we swept like the previous high of the day. Fell down, came back up, OTE, breaker block, fair value gap, and its price was above the 0830 open and the daily open. So that was the best sell, and it's within our window. 10:45. Notice the quarterly theory as well. It was in our window, and the rest is history. We had our target. This is the main thing, like our drawn liquidity. It's pointless to not know where price will draw down to. It's just always have a draw. That's where 80% of the work goes into, and then you're nice. Draw is present, entry point. We sold off beautifully. That was, if we're measuring from the low of the fair value gap to the high there, 66 points. Not bad at all. Not bad at all, 66. And if we had our high over there, let's just take a look, see. That's about 53 points. 53 points. So if we were to look at our risk to reward ratios, if we had that there, placed our high, say at the top there, 49, took this one there, that would have been a 1.3 risk reward ratio. If we stretched it out to 2, would you have gotten it? If we had stretched it out to 2, we most definitely would have gotten it. So a nice risk reward ratio of 2. If we had our stop loss above there, entering at the low of this fair value gap, this is the I often measure using the sloppiest entry just to have a but if we use that OTE, we could have gotten it even more tighter. Could have even gotten that 3, but yeah, beautiful day, nice movement. Main thing to remember: sweep of liquidity, break of structure, change in the state of delivery. We broke that short-term low, retracement back into the fair value gap, and head down. Simple as that. Gonna just put this here. Gonna just see if projection. Nice. So if we use this manipulation here, you can see how price got to that -2 standard deviation area, and then it reversed. If you've been following the channel, you'll know that using these standard deviation projections, you can get a pretty accurate place to take your profits. And that -2 to -2.5 area, that's where you'd look to take your first partial, and then ultimately look for price to get to that -4 area. Right over there. Price is still loading. My network has been a bit trash. I don't know why. I just want to show everybody what price structure lines up with that -4 area, if it'll allow us. If not, okay, cool, it's fine. Yes, you can see there's a pool of liquidity resting underneath here. So we'll be looking at price to perhaps make its way over there. Just looking at this 5 minutes, you can see that, yep, it looks pretty solid. I might enter something else. Yeah, 33 points. I might just enter something else. But yeah, thank God for the skill. Another day, another dollar. And we'll be back again with another one. Stay safe.